In this video, I'll share with you 9 most common mistakes that new investors make when investing in stocks. Mistake number 1, investing too much too soon. One of the biggest mistakes I see new investors make is putting all their savings into the stock market right away. When you're not experienced yet and don't really understand how the stock market works, this mistake can cost you most, if not all, your savings. It can become a very expensive lesson that you'll never forget. Instead, as a new investor, your goal should be to learn how to invest properly by risking the least amount of money that you can. You can start with just $100, test different investing principles and strategies, and really get a sense of how the market works before you decide to invest any more of your money. If you start with $100 and lose most of it, you'll know that you're not ready yet to invest more of your money, and you should continue learning more about how to invest with small amounts. Mistake number 2, trying to time the market. Let's say that the stock you want to buy is trading at $40.20. You think that there is a high likelihood that the stock will become $60 in a few years, so it's a good investment. The common mistake that new investors make is trying to time the market to get this stock at a lower price. For example, a new investor may not want to buy this stock at $40.20 and wait until the stock becomes $40 to buy it. While the stock price could go down to $40, there's also a high likelihood that it never will. So if you think there's a potential to really make up to $20 in a few years and profit, why would you bother trying to time the market perfectly to save 20 cents? If the stock price doesn't go down by 20 cents, you'll never end up buying that stock and you'll lose the opportunity to make $20 on it. The third mistake is not diversifying. Don't put all your eggs in one basket or all your money into one stock. For example, if you put all your money in a Tesla stock and the company goes bankrupt in a few years, you'll end up losing all your money. Instead, you should diversify your investments by spreading your money across different stocks in different sectors and different industries. As an example, don't put all your money just in technology stocks. Also consider investing in manufacturing companies, retail companies, financial companies, medical companies, and others. This way, if only one of those companies or industries experiences economic downturns, your investment will be protected because other companies will continue performing better. Mistake number 4, listening to influencers. As a new investor, don't rely too much on influencers for investment advice. Most influencers that you see on YouTube and Instagram rent their luxury cars and luxury houses for a few days and pretend to be successful day traders so that they can sell you their online courses. Most of them are neither qualified nor experienced enough to provide any reliable financial advice. Instead of blindly following and listening to these influencers, take the time to learn more about their qualifications and credentials. Don't fall for luxury cars or houses. Remember that most of them are rented to trick you into buying their courses. Mistake number 5, day trading instead of investing. Day trading is when you buy and sell the same stock within the same day, trying to profit from the short-term price movements of the stock. I consider day trading to be a form of gambling, and it's extremely risky, especially for new investors. You're more likely to lose all your money instead of making any money from day trading. Instead of day trading, it would be way better for you to focus on long-term investment strategies. Invest in solid companies and don't try to buy and sell the same stock within the same day. By being more patient, you're way more likely to make a significant profit from your investments. Mistake number 6, panicking too soon. I understand that it's very easy to get stressed out and worried about your money when you see that the prices of your stocks start declining. But remember that small price fluctuations in the stock market are very normal. The stock will rarely stay at the same price. It will go up and down in value in the short term. What's way more important is for the stock price to continue going up in the long term. Most new investors tend to sell their stock too soon and lose money, and then the stock eventually recovers and continues growing. So don't panic and sell your stock too soon if the price drop was small. It's very likely that it's gonna recover again. Mistake number 7, investing in random companies. You may hear about a random company from some influencer who promises you that the company is the next big thing. The common mistake that new investors make is investing in those companies without really understanding what the company is and how the company makes money. Instead of investing in random companies based on hype and speculation, Invest in something that you know about and understand. If you're the customer of the company, that's even better. For example, if you shop at Walmart, you could invest in their stock. Or if you eat at McDonald's a lot, you could invest in their stock as well. You can watch my video about 10 stocks that I'll own for life, where I share more details about this approach. Mistake number 8. Ignoring tax consequences. For most new investors, they don't understand how different investment decisions will affect their taxes. For example, if you sell your stock within just a year of owning it, you could end up paying way more in taxes compared to someone who kept the stock for more than a year. Each day can play an important role for tax purposes, so you can save a lot of money if you understand the most common tax rules for investing. As a CPA, this is something that I'm planning to cover more extensively on my channel if you're interested in learning more. Mistake number 9. Thinking that you'll get rich quickly. This is the last but probably the most common mistake that new investors make. Many people enter the stock market with expectations to make huge profits quickly. You have to remember that building wealth from investing will require a lot of time, patience, and discipline. Investing should be a long-term journey, and you should have realistic expectations as a new investor. Don't take unnecessary risks. Remember that as an investor, your first goal should always be to protect your existing money, and your second goal should be to make some profit on it. Let me know in the comments what types of mistakes you've made as a new investor. Thank you for watching this video, and I'll see you in the next one.